Equity advisors joining us on the show. Sushil, hi, morning. Talk to us about your reading on Reliance. Break down the O2C bit, the retail bit, and talk to us about if they've been in line with what you were expecting. Sushil, could you please unmute yourself?
Good morning and thanks for having me on the show. I think Reliance result was online with the estimates on the street. Two divisions specifically led by oil to chemical did very positive. Jio was stable and positive. Retail was a little disappointment because of the GST changes had an impact on 1 month and the festive season had gone to Q2. So if you combine all three, that is the way to look at it, that the result seems online. I was happy that oil to chemical division throughput was exceeding 20 million and GRM was on stable note. And the cash cow continues to energize where entire expansion of Reliance which started with retail and Jio, and now the new energy business is taking off, which will take another 6 months, looks like, based on the commentary. So if you combine all the divisions combined, I think the yearly EBITDA without other income at 1,85,000 crores and debt nearing around 1 lakh crores seems to be on track. And if you put sum of parts of all the four divisions, 600, 600, 450 and 250 for the new energy, I think seems that 1700 to 1850 is the target, which I think most of the brokerage house would give out. And if you're invested in the stock, times may be positive because rupee dollar nearing 91, import parity product plus you process and export. The other side, the capex for similar kind of a complex to put up would be 2 times what Reliance's gross block is. So I think it's a win-win situation. Only thing is global times are a little troublesome. Challenges are emerging on a daily basis. Reliance in that has sourced crude well, placed all the diesel and other cracks, refining margin on a better note. So things are good. Jio ARPU is little inferior compared to Bharti. So I think the street is estimating that Reliance before the IPO for Jio would hike their ARPU and get it more towards Bharti. So once I think the customer capture is done, it should move from 213.7 in the current quarter on an annualized basis to 235, 240 range. And that would become a kicker for the earnings side.
Sushil, how are you penciling in the retail performance, especially with respect to margins which have been sluggish in this quarter? Do you think that retail will take at least a few quarters before it inches up?
I think expansion modes is on track. As I earlier spoke, that GST changes led to an impact for a month. So if you align that, it would not much of an impact. But retail on a pure basis, also their margins are in the same line as what others have done. I think the earlier result of Trent and DMart were indicative what is going to come from Reliance Retail too. So it's okay. Means one has to assume that all divisions can't fire for you on the upside. But on a pan-India basis, the number of stores nearing 20,000, the square feet and per square feet sales, all that seems to be on track. So I think it's a matter of time before you get the real picture of what Reliance Retail is.
And how do you see Geo? Two triggers coming in, one expected listing and the second anticipated price tariff hike. Do you see that helping it a bit? Because we don't have a clarity on the tariff hike yet, but the industry is looking towards one. And as you said that it's trying to bridge the gap between the ARPUs between which Bharti has. Organically, it seems very slow to bridge that gap. Is tariff hike the only way to bridge that gap?
I think tariff hike is the only way because Reliance Capex has been more captive with their own technology and rollouts on fiber to home and various things. So I think one has to look at how the tariff plans change. And Vodafone has already done it. Bharti is already 20% almost higher than Reliance. So looking at it, if they even bridged up to a 10% differential, that would work well. And I think tariff will come first and then would be the IPO. Or
Okay.
rather the listing in whatever form they come out. The street is already estimating that the IPO size would be only 2.5% of equity, which means scarcity premium.
Okay, Mr. Choksi, appreciate you joining us and taking the time out to deep dive into Reliance's numbers. Thanks so much for your time this morning.
Thank you.
Okay, viewers, shifting focus from